Hi all, welcome to Cryptonite. I'm Sham and I have Dr. Tejasvi with me. This is a roundup of all things crypto related that happened in the last month. And Dr. Tejasvi is joining me from Switzerland, and I'm, of course, in Bangalore. And uh, let the show begin. So, Dr. Tejasvi, do walk us through what happened. What did we miss last month?
Yeah, the doctor thing is a bit tricky. You know what is interesting here? In Switzerland and in Germany, if you have a PhD and you are a professor, they call you a doctor professor or a professor doctor. They deem it important enough to add both of the titles in your name, which I find a bit pompous. But anyway, leaving the doctor thing aside, so what's happening in crypto? I think it's safe to say that the bull market is kind of back in crypto. Bitcoin crossed $50,000, which it has. I think the last time it crossed $50,000, things were, I would say, much frothier overall compared to why how it is right now. Right now, with $50,000, things are, you can say, bull market, but still fairly subdued. Things are not completely crazy. Celebrities are not promoting it. There are no like obvious scams going on. Back in the day when Bitcoin crossed 50,000 in 2021, FTX was selling paper Bitcoin. There were crypto ads in Super Bowl. Then stadiums in the US were being named after crypto companies. Crypto.com had launched a bunch of advertising campaigns and a bunch of other things. And generally, the mood was much more, I would say, kind of irrationally exuberant back then. Now it seems much more grounded. Interest rates are still very high in the US. And despite that, Bitcoin is doing pretty well. And that is a good sign, I think. At least as an industry participant, I find that this is a much more sustainable bull run. And of course, one of the major things that is, I think, important here is the Bitcoin halving is coming up in April. What I mean by halving is, if people don't know, Bitcoin's supply is set in stone in some sense. It emits around 6.25 Bitcoin every 10 minutes uh, into existence, and that will half to 3.125 Bitcoin per every 10 minutes. So effectively, new supply will start, will reduce. But of course, the older supply is still there. A lot of Bitcoin is still liquid. The market is fairly liquid. It's a large market. So this constricting of the new supply might not make a big difference. Of course, it will make a big difference in the small community of miners who actually rely on this particular revenue source to make money. But they are market participants. They will adjust their own expenditure based on the revenue, because Bitcoin obviously you can tune your expenditure very granularly, because a miner's expenditure is typically electricity costs, and if the electricity cost is high, then they will turn off their machines. Or if the profit from Bitcoin mining is also low, they will turn off their machines. So they can calibrate their expenditure. This will be reflected in the Bitcoin blockchain itself. If, for example, the mining power kind of reduces because the revenue has gone down, then you will see that the number of hashes done every second will drop, which has almost never happened because of economic reasons till now. Despite economic reasons pointing downwards, the Bitcoin hash power has continued to climb, which shows that people do find electricity somewhere for cheap, and they will continue to mine Bitcoin. It is maybe in Kazakhstan, Kyrgyzstan, Bolivia, India, Norway. You know, Norway actually has 99% hydropower, which I didn't know before. And apparently, some of the hydropower is very difficult to transport and very difficult to use immediately. So wherever those dams are located in Norway, which are like in mostly inhospitable places, you can situate a Bitcoin mining rig right there. And if there's extra power, you just consume it and you use it to mine Bitcoin. So Bitcoin mining hash power is at all-time high right now. We expect it to contract a little bit with the halving in April, but I'm not sure. Anyway, so this is the large picture of Bitcoin. And of course, where Bitcoin goes, the rest of crypto follows to a large extent. So all the other coins are also doing somewhat well. Notably, Solana is doing well. Ethereum is kind of holding, but not doing as well as it should. So there is a famous chart in the crypto ecosystem called the Bitcoin dominance chart. So in Bitcoin dominance, if you can Google it, you'll find it. It's basically, you will see the total crypto market cap, and you see how much Bitcoin dominates the other cryptos. So if it is less than 50%, it means the other cryptos are doing well. And typically this happens in the late stage bull cycle. So the bull market starts with Bitcoin doing well, then Ethereum does well, and the rest of the altcoins catch up. This is a typical cycle which has happened 2 times in the past. But the weird thing is the altcoins are different each time. So Bitcoin and Ethereum, I would say Bitcoin has been kind of there since the first cycle, obviously because the first crypto coin. But Ethereum has been there probably since the second or third cycles. Solana has been there for the last 1 or 2 cycles. So some of them stay, but a lot of them disappear. So it's kind of the way things are. So I would expect other altcoins to kind of kickstart their bull run in the next few months. If you want to go by the past, and as we know, the past is not an indicator of future. So anyway, this is the overall macro situation in Bitcoin crypto land. A lot of smaller developments happening. Obviously, the Bitcoin ETF is doing phenomenally well. Some people are claiming that it is the best ETF launch forever, maybe. Uh, Incidentally, gold ETFs are bleeding, which is sad for gold because I'm a big gold fan. Bitcoin ETFs have drawn, I think, accumulated volume of around $5 billion in the last, I don't know, 20 days, maybe 15 days, with BlackRock taking a major chunk of it, Fidelity taking a big chunk, ARK taking a big chunk, a couple of others, Bitwise also taking a big chunk. The biggest loser in this space being Grayscale, which was an old, not a traditional ETF, but it used to have a closed-ended product back in the day. They converted that to an ETF, and that ETF is bleeding a lot of value because their fees are very high. So they charge a fees of 1.5%. The other ETFs charge like 20 basis points. So it's a dramatic difference, and that is reflected in the valuation.
It's kind of weird for GBTC because they are the ones who sued the SEC for the ETF license. And I thought that once they converted to ETF, they would, they would drastically chop their fees so that they can lead in volumes. But it seems like an idiotic move to, to pioneer this whole space and then keep the fees where they are when they knew that, if you look at, the whole iShares stable, right? It's just dirt cheap, expense ratios for vanilla stuff. So when you can buy an S&P 500 ETF at like 5 beeps, right, or 3 beeps, nobody in the right mind is going to pay 2% for a plain vanilla Bitcoin ETF. So it
Yeah,
feels like a very poorly thought of business strategy from Grayscale.
yeah. So there is a couple of reasons why they're doing it. It's not completely, I would call it lame. One is when the Grayscale product was closed-ended as a exchange product or whatever it was, it had accrued around $30 billion worth of assets, and only around 5 billion of that has flown out now. So the remaining 25 billion is still there, and they're paying 1.5% as opposed to like paying 20 beeps in BlackRock, right? Now that 25 billion is somewhat sticky. It will still flow out a lot of it because of fees, but it's somewhat sticky because many times when you sell the Grayscale ETF and buy the Fidelity BlackRock ETF, it's a taxable event, and many people don't want to realize those gains because Bitcoin has done very well for a lot of people because that product has been there for like 5+ years, and they have accumulated a lot of value back in the day. So those guys don't want to sell because they will realize the gains and they have to pay a huge amount of tax for it. So keeping it in the ETF will let them kind of avoid this taxable event. And they might have done the calculation to figure out whether the 1.5% fees is worth the money they're paying instead of paying the tax man all the money. So I think there is some calculation there which people have done, and I think Grayscale is smart enough to know that this calculation will happen. That's why they brought their fees down from 2.1% to 1.5%. So they reduced it a little bit, but not enough. So they've done some calculation on it. So I think they are kind of comfortable in their skin. So, but of course, we are all thankful that they sued the SEC and got the ETF going. So that is always a win. So overall, I am somewhat happy with the state of affairs.
Yeah. So speaking of ETFs, so last episode I said that it's finally time for me to buy Bitcoin. So, with great hopes, I logged into Interactive Brokers and I said IBIT buy, and a message pops up saying you're prohibited from buying this from your jurisdiction. So
Ouch.
the long arm of RBI has reached Interactive Brokers as well, because then they kind of know that this is kind of like a black back channel uh, to avoid the TCS, tax collection at source, that they do here with crypto. So they have blocked that avenue as well. So so I'm still Bitcoin less. So I need to figure out what else to do, because I'm extremely uncomfortable with all these keys and hardware wallets and all that stuff. I'm so
Also,
I'm just not sure.
it might not be easy to buy vanilla Bitcoin by logging into an exchange from India as well. Like if you log into Kraken or OKX or Binance or any of those Coinbase, you will have the same problem. The geo fencing will apply there as well. So buying vanilla Bitcoin and transferring it to a hardware wallet is might also not be an option. So I think so. I actually spoke to a couple of startups in Bangalore recently who are uh, trying to allow Indians to buy crypto assets uh, in India by doing a classic KYC based money transfer to their account, and then they will manage your account. They are called virtual. Uh, so they're all registered with the RBI uh, or with the Financial Enforcement Directorate or something. So it's an interesting model because they have to just. So anyway, when I spoke to the founders, the message I got, and my whole case was, we are bearish about this because Indian regulations are going to be terrible for anybody who wants to invest in crypto. But the message I got from the founders, who are very smart, both one of them was IMA alumni, one of them was a Bangalore Engineering College alumni, a well-known engineering college. So their take on it was very bad like three years ago, but since 2023, things have become much more clear. We have clear guidelines on what you can do. So they are not just buying crypto assets, by the way. They are not just buying Bitcoin and Ethereum on the back end, right? So the strategy involves much more than just Bitcoin and Ethereum. They are buying crazy DeFi protocols. They're doing yield farming, liquidity mining, all these other completely bonkers crypto strategies, which I would not do any day of the week, right? Because I have no clue how they work. These are like really advanced crypto strategies. So these guys have like 10 or 12 people in Bangalore who are crypto native, so to speak, and they are accepting Indian rupees anywhere from 200 rupees onwards, all the way to like high net worth individuals, and they are doing crypto strategies. So this is like a classic so-called vault. So we've seen this vault product many times in the past. So you put your cryptocurrency in this vault, and the vault will have its own strategy. I mean, you can call it an actively managed fund in some sense, right?
Yeah,
So
so they're going to go to jail. So SEBI has this thing called pooled vehicle rules. Okay, so this falls under an AIF category. So without having an AIF license, you cannot operate a pooled vehicle, a pooled
so that's what
investment vehicle.
that is exactly what
So
I asked them, and I heard that they actually have that license or whatever it is. Hang on, let me just
then it
pick up.
can't be $200 that you can, because the minimum ticket size for an AIF I think is 1 crore. So
So you need to
you
have ultra high net worth individuals to make it work.
yeah, so you need to invest at least 1 crore in it, and also there are rules around continuing balances as well. So supposing they buy I mean they do some goof up and they are down like say 30% for like say 2 years, right? So they hit a drawdown like that. They need investors who can top up as well. So it's not like 1 crore initial investment and you're done. So
Oh,
you need to maintain that across some reasonable time frame as well. So so unless they have that license and they are approaching these HNIs and doing it that way, then SEBI will have a serious problem with that.
okay. So I am not aware of this. I have to like, of course, this is on my due diligence checklist when I speak to startups. So I'll definitely remember this particular question to ask. Thanks for the professional help there.
No worries. But see, these kind of schemes they keep propping up. So I don't know if if you've seen the Twitter andolan around SEBI's API issue. So
No.
okay, so all brokers now in India, like regular stockbrokers, they provide APIs. And for example, I have not punched an order myself in a fairly long time. So most of it is automated stuff. Um, so now the problem is there are platforms out there where you can submit your um, auth keys, like you can do an OAuth, and um, and these are algo platforms where somebody has submitted an algo, and if you choose to map that algo to your account, it'll start trading on behalf of you and start pushing through algos, I mean pushing through trades. Now, the issue SEBI has is that none of these algos are regulated, in the sense, if somebody has goofed up in its implementation, then you might have some thousand accounts that are running it suddenly doing the same trades in the market. And they're worried about market dislocation because the brokers um, claim that they have no idea where these actual orders are coming from. Like they have no way to differentiate whether a particular order is coming from one of these algo platforms, or if the actual on the pike to manage that thing as well.
Yeah, that makes it complicated for them.
Yeah, so
So
so these guys may be hiding behind the that saying that we are only operating an algo platform and we are not really pooling funds or anything of that sort. But even there, the door is closing, and there might be some regulations around who can use this, and some sort of exam that clients should also be taking uh, to make sure that they know what is going on, and so on and so forth. So
okay, interesting. So I will
yeah,
definitely make notes on this, and this question will be asked, and I'll hopefully get an answer from these ambitious startups in Bangalore.
yeah, and the other problem is, everybody, all fintechs say that do KYC and stuff, but the problem is that the kind of level of KYC that RBI expects is different, and fraud is also at a different scale. So ICICI Bank
But
had
it,
this
but it,
issue.
but isn't there standard Aadhaar based KYC these days?
No, so ICICI Bank had this online account opening setup. So all banks have that. So did ICICI Bank, where you could do Aadhaar-based authentication. Show your PAN card and stuff on screen and get your account open. Now, back in October, RBI found some serious issues with the way those accounts were being opened, and there was some fraud, but they fined ICICI some a few crores of rupees for this, and ICICI pulled down their online account opening setup entirely because they just
Wow.
did not want to be non-compliant. So since the last few months, you can't open an ICICI bank account online. That is like, they just shut it down. And for the same reason, they're shutting down Paytm as well. So it's a multi-billion dollar enterprise. And, RBI is like, okay, you guys don't take KYC seriously. So they just shut them down. And basically, that's what's happening. So the what you think of KYC versus what RBI wants is completely different. And I wanted to open an ICICI bank account for some entirely different reason. So I had to go to their branch and submit a video where my eyes are blinking and so on and so forth. So it's like some fraudster has found a way in which he has bulk opened a whole bunch of accounts using somebody else's photo, I suppose. and created havoc with their systems. So now they're becoming extra careful and making sure that those things don't happen.
Oh my goodness, video with eyes blinking.
Yeah. So and now that fellow apparently has to come to my house and make sure that I am actually living here and then sign off on that. So
This is to open a regular savings account in ICICI Bank.
yes, because they found some serious problems with the online account opening process, and they were like, this can't happen again. And so
So
this is one issue.
the long and short of it is KYC is non-trivial.
It is not at all non-trivial, and you know the repercussions for not following this process is fairly severe. So it's not something that you can just do with some Aadhaar and PAN card photocopy and say you're done.
Interesting. Very, very interesting. I did not know it was that complicated. Good to know. I'm adding it to my questions. Eventually, if I hear Indian startups doing crypto savings vehicles, I know what to ask.
Yeah, absolutely. And I think crypto in general, RBI wants it to go away, but at the same time, they have adopted a lot of things from the crypto world. So, now they want to make their what is that CBDC programmable. So they're already piloting a program. I mean. I wouldn't say a version. It's like there's only one Indian CBTC, and they made it programmable. So they're piloting that and saying, okay, what if we do direct benefit transfers? Like if the money is for buying fertilizers, how do you make sure that the farmer only buys fertilizer with it and not go to the liquor shop and you know have a nice time? So so they are piloting those things at this point. So they have taken the the worst parts about the surveillance state that crypto enables, and they're trying to apply that here.
Why am I not surprised? Why am I not surprised? Again, this was what we had always feared as the worst part of CBDCs coming into play, where money becomes a full-fledged vehicle to exercise paternalistic slash uh, patriarchal control in some sense. And it's quite sad to see that it's happening. And I hope somebody will sue the government on this. But I have little hopes that these things will happen. Hopefully, the pilot will not be as successful as we typically expect pilots to go with. I don't know. I'm hoping that things don't go that bad. But this is a
Right.
sad piece of news.
Yeah, so this whole idea of stopping leakages you know uh, is problematic. And on top of that, I don't think our judiciary knows the difference between democracy and populism.
Yes.
So so they kind of believe that populism is democracy. So unless something is not tuned to that populistic tendencies, then it is undemocratic. So
Yeah. Hopefully there are other better lawyers and public interest litigators or whoever it is who try to take it. I will see if I can. I don't know, Electronic Frontier Foundation or Center for Internet Freedom in India. There are a bunch of people who are at the forefront of this. But again, I have very little hope.
right. So let's see how it pans out. But at least now nobody really cares about CBDCs other than a few journalists and guys who want to test it out. But if that can be said about just about anything in India, right? So once you say that government handouts are now coming through like this, then people will be forced to adapt.
Yeah,
um,
that's a sad thing.
so yeah, let's see how it goes out. So what is going on? Do you think Ethereum will get an ETF? I see some filings in the SEC website where for
Yeah.
Ethereum.
There is a Ethereum ETF, definitely a possibility. So, couple of things going in its favor are that Grayscale, the one who pioneered the Bitcoin ETF in some sense by suing the SEC, They also have an Ethereum trust, which kind of works similar to how the Bitcoin trust worked. So they have a bunch of ETH that is lying around that they sell units of as a closed-ended product. They would like to make that an ETF, obviously. I think BlackRock has also filed a ETF application, and most of these are coming to some sort of a judgment time window around June of 2024. So there will be something happening then. But Ethereum is inherently complicated as an ETF product because of two reasons. One is if they allow staking from the ETF itself, it becomes a different category of vehicle altogether. If they don't allow staking, then it's a losing product because if you take ETH and stake it with a staker, then you have a 4% yield on it. So who in their right mind will let go of 4% yield for a product that is inferior, right? So even if it launches without staking, it might be not as successful because of the lack of yield. If it launches with staking, it will become a different category of vehicle. It will not be a commodity in the true sense because it has yield on it. So Ethereum has a bit more complexity around it. The same arguments that apply to Bitcoin will not apply to Ethereum directly. But of course, there's enough financial interest in the ETH ETF, so it will probably see some form being launched, but it will not be as straightforward. So I was not holding my breath on the ETH ETF this year, but I could be wrong. I am one of the more bearish people on this. There are probably bullish people who will assume that it will happen in summer.
Right. So, so what happened to this Craig Wright? So
Oh man,
I saw a tweet about some signed integer, unsigned integer.
yes,
So
yes,
what's going
yes.
on?
I will give you the whole skinny on this. This is actually a fun story. So for folks who don't know, Bitcoin was invented by Satoshi Nakamoto, who we don't know who that Satoshi Nakamoto person or persons are. And then he dropped the paper, wrote the code, ran the network for the first couple of years, and then in December 2010, it disappeared. It's gone, poof, right? As if there was no such person. And Bitcoin is totally fine without it. Bitcoin can run independent of the original author because the source code is there. We can work on it. The paper is there. We can read it. The ideas are there. So it's all kind of, there's no dependence on the founder to make it work. And a lot of people have argued, including me, that that's a good thing because you don't want a spiritual founder who can direct and control the protocol. We want the protocol to be kind of like physics. Like, there's nobody who says gravity should work this way, right? As if it would change because of that. But still, it's good to have somebody who doesn't control the ideas spiritually as well. But there happened to be this guy, Craig Wright. He's an Australian academic, for the lack of a better word. And he's been claiming that he's Satoshi for the last many years. I would say around 10 years or so. Of course, most serious people think he's a joker and they don't really take his word for it. Because, of course, there is an easy way of proving that you're Satoshi. Satoshi mined the first Bitcoin block, very obviously. And there is a private key behind the public key of that block. That block has a particular transaction which gives money to Satoshi, and that transaction is guarded by a public key. And the private key is with Satoshi, hopefully. And if you sign a message with that private key, you can prove, like without doubt, that you are Satoshi, right? Of course, Craig Wright has not done that. But he has claimed a lot of other things. He has claimed that he wrote the paper, he had a draft of the paper in his computer back in the day. He had spoken about the word blockchain in 1999. He had spoken about time chain in 2007. He impressed some people because he was so cool in 2014. In 2008, his sister thought that he was bound to do great things in life. That is proof enough, apparently. So if your sister thinks that you are cool, then you have to be cool, right? Anyway, he has a bunch of these claims. But if it was just a claim like that, it would have been okay, right? So things are fine. Some joker is saying something in the world, nobody minds really. But he has been much worse than that. What he has done is he has sued everybody or most people who are involved in the Bitcoin process. So if you host the Bitcoin white paper on your website, he will sue you for copyright. If you work on the Bitcoin source code, he will sue you for copyright. And he is able to do that because one of the biggest Las Vegas billionaires, Calvin Ayers, who owns a bunch of casinos, is backing him as a bankroller. So if Calvin Ayers backs you and you have the legal muscle to sue people, then the people you are suing become the victims. So the most famous case was a Norwegian journalist who used to tweet under a pseudonym, and he claimed that Satoshi is Craig Wright is an idiot or some. He wrote a tweet saying that Craig Wright is an idiot. He's not Satoshi, obviously, and he got sued for that. And it went to a court in Norway, and that guy had to pay a lot of legal fees to defend himself. Same thing happened with Peter McCormack, who is a famous podcaster in England, and a bunch of others. So Bitcoin.org took down the Bitcoin white paper from their website because they were scared of being sued by Craig. So he has been very damaging to the community. Here is the point, right? Even if he is Satoshi Nakamoto, we don't care who it is. Even if he is, it is still damaging to the community. So overall, so what happened was people got tired of this. So a bunch of Bitcoin enthusiasts got together, formed an organization called COPA, and they sued him, saying that you are not Satoshi and you cannot sue anybody else after this. And you have to defend in court now how you claim to be Satoshi himself. And they have a whole bunch of evidence. They are like specialists who know this domain very well. They got a good lawyer, a bunch of evidence saying that you have forged all the documents, you are an idiot, you don't know anything. And the best part was he was put in the stand and he was asked, what is an unsigned integer? And of course, anybody who knows computer science knows what an unsigned integer is. But here is the kicker. If you think that you know computer science, and if you think that you know cryptography, you might think that the signed in unsigned means cryptographic signature. So he thought an unsigned integer was an integer which was not signed cryptographically. So you see how much of a complete clueless guy he is, right? He has no clue. And here's the problem. The Bitcoin source code in the beginning, version 1, had around 600 unsigned integers. Obviously, because he's trying to write a very efficient code. So most integers have they don't need a sign because they're not going negative, so life is good. Of course, he didn't know that, right? He has no clue about the code. He's a pretender. So anyway, this is what happened, and the court is doing its thing. The case is still going on as we speak, and hopefully it will get resolved in a good way where people will force him not to sue anybody else again. And we don't care. I don't want him. I want him to suffer a little bit because he's been very damaging. But if he just disappears on the side without being relevant anymore, that will be good enough. It will be a win for the community. So it's been fascinating to follow it because we have suffered a lot under him, and just to see him not know anything publicly is a good feeling.
Right. I hope I hope somebody else doesn't spring up after you take him down, right? So
yeah, it's possible because here's the problem, right? I mean, you really can use the legal courts to claim pretty much anything, and as long as you have purported proofs, you will have your day in court. And the thing is, if you have your day in court, the opposition also has to be present in court, and they have to expend the fees to manage that. And that's the cost of the system. And hopefully, this case will kind of make that cost go down because it will be obvious that you can't win this case for anybody till you do certain things, and those things can be very publicly proven. So till you do that, it's not even going to go to court. The court will dismiss it by default. Anyway, so this is the fun part. You know what is funny in terms of legal proceedings? So there was a company called Debtbox, DEBTBOX, and they were in the US and they were doing some crypto stuff, and the SEC sued them saying that they were doing something illegal, and they shut them down. And eventually it was realized that the SEC was completely overreaching here. They had no legal basis to shut them down. And the SEC wants to withdraw the case against them now. Because if they go with the case, it will be proven obviously that they are like complete idiots. And the guy who is the SEC is suing doesn't want them to drop the case. Because they know that they are right. And the SEC will lose if they actually go with it. So SEC made a motion to dismiss the case. But the defendant said, we don't want to dismiss the case.
So, yeah, because they want the judgment on the books.
Yes, exactly.
Yeah, makes sense. So that's actually pretty smart. Yeah.
Yeah. So it's all. I mean, the court system is obviously complicated, and it has evolved over millions of trials and real life incidents, and it's very understandably complex. But whenever these things happen, and they kind of paint this picture of justice and stuff, it's very nice.
Yeah. So the best part about the U.S. justice system is, the government agency that is suing doesn't have infinite budget.
Yes,
Whereas in India, there is an infinite budget. So they don't do any cost benefit analysis. So here you end up, hearing about cases where somebody sued for like 5 grand, 10 grand, and, some nonsense chiller change. And the court case drags on for like years, like 10 years, 20 years.
decades.
And there's no incentive for the government to drop it, so they just keep dragging on, and god forbid if you don't live in the city center or wherever, right? So if you are living outside of Bangalore, for example, you have to come to attend the court, whenever the date is there, and half the time the government lawyer doesn't even bother to show up. So it's a terrible mess. So at least in the US, they, by assigning a cost to it, they've managed to sort of prevent this sort of frivolous nonsense. But I hope that there are more such instances where, when you do get sued by the SEC, instead of doing all this settling and allowing them to withdraw and all that stuff, you just go after them, like reverse it, and go for it. So the last topic, I think, crypto and AI. I think we discussed this a couple of months ago, and you're saying there are some exciting projects there.
Yeah,
So what's going on now?
what's going on, right? I mean, it's going pretty pretty, I would say, hyped, but also there is some reality backing it. So essentially, AI hype is definitely real. AI models have fundamentally advanced. There's definitely a real technological progress happening in AI, right? So that is beyond question. Now the question is, what does crypto have to do with it? Ideally, nothing, because crypto is nothing to do with AI. Different technologies, different underlying systems. It's an entirely different. It's like saying, what does roses have to do with laying roads or whatever? It's completely different, two different domains in the world. But of course, because the venture capitalists are involved in both sectors, they try to create a hype narrative which combines the two, and that gives you like this kind of leg up, right? So crypto can ride the AI wave, AI can ride the crypto wave, and everybody's happy, or to some extent. So anyway, the main ideas happening here are around the ideas of uh, because these models are huge. So the typical large language models are huge. They can't be hosted on your. I mean, some of the models can be hosted on your computer. People are working on making them hostable on your phone, but for the most part, they're still pretty big. If they're pretty big and you're allowing somebody else to serve you results from an AI model, can you trust those results? How do you know they are not garbage, right? So that's like the main area where crypto is helping. Crypto says, we will prove to you that you have used the right model. That's one kind of domain. Bunch of startups and public companies in this. So the most liquid crypto token is kind of doing this in some sense. So that's kind of there in that space. Then there is another interesting space which is slightly orthogonal to AI, but is related to AI because of the AI demand, which is the training of AI models needs a lot of GPUs and a lot of compute power in general. And of course, you could go to Amazon or Google and rent the computing power and train your models. But they are doing their own model training, and they are not really available for you to train. So GPUs from Amazon are very expensive. So there are a lot of GPUs in the world. People have gaming GPUs. There are GPU farms which are used for Ethereum mining back in the day, which is not useful anymore. So a bunch of GPU marketplaces have sprung up. So you could use GPUs from the marketplace like this, and the marketplace is brokered by a crypto token. So one of the famous ones is called Akash network. So Akash is a blockchain which basically brokers GPUs for users. So you go to Akash, you pay in the Akash token, and the Akash token will let you rent GPUs by the hour, by the minute. In fact, by the token, like token as in not the crypto token, but the AI token. So you could say, I want to read one sentence of AI result, and that will be five words or 4 words, and each word will be priced by the token. So you have true micropayments in that sense. And because there is a blockchain and smart contract governing it, you could pretty much rely that it will do the right accounting for you. And the accounting costs will not exceed. Typically, these microtransactions don't work because transaction costs kind of shoot up, right? So here the transaction cost is fairly understood and well capped and well managed. So this whole brokering of resources can be done more efficiently. And anyway, that's the pitch. And Akash is doing phenomenally well. There's another protocol called Render Network. And Render has an interesting history. They initially started before the AI hype. And when you say render, it means rendering of images, right? So their job was they would take videos and upscale them or downscale them using GPUs. So they were doing video operations on demand. So if you have a Hollywood movie and you want to reprocess your footage, you can hire GPUs from Render. But of course, when AI came about, Render shifted from video rendering to AI training. So Render, Akash are the top liquid tokens in the GPU market. And if you go down the list, if you look at AI coins on Google, you will find a bunch of lists of AI coins. And they have all these guys. And the valuations have shot up in the last year or so. And of course, the private valuations, which we see as a venture capital firm, is also like completely crazy. Understandably so, because the narrative hype is very high. Like we met a company a couple of weeks ago, which was quoting a valuation. And then they said, even if the valuation is not met, we'll keep increasing it every 3 weeks. So this week they're raising at 30 million. Next month they're raising at 40 million. It doesn't matter. It doesn't matter what the market says.
Unbelievable, man. So I hope I hope they get their asses handed to them. But
they can do that only if two things work out, right? One is the narrative hype is very strong, and their product is not complete junk. They have something real, tangible, good stuff going on. So when both the things align, then it's a valuation mania. And again, of course, it makes sense because there are times when entrepreneurs have to win because the hype game is strong and the VCs are complete dorks for following them. And sometimes VCs win because the market is very low and entrepreneurs are desperate for funding and VCs have their tubs, right? So both sides of the equation play out, and that's how the world is.
Right. So I think AI is just going through a Cambrian explosion at this point, just like how crypto was going through, in 2020, 2021. So a lot of experimental stuff going on. Most of them are going to die because, they're like novelties, I suppose. And even if you look at some of these so-called co-pilots, people get tired of them fairly quickly. And they're more of a distraction rather than like the top Google searches for co-pilots, went from how much do co-pilots cost versus how do I turn off co-pilots, right? So, uh, so that says quite a bit of the current monetization that people are trying to do. But I feel there are some niches where they're going to be like super, super
Effective,
successful. I think
yeah.
if you look at Captain Nemo or one of those things, right, hand drawn stuff, and you look at the output being produced by some of these AI physics engines, and it's mind boggling. So I think that is one area where you're going to see tremendous uptake, but there are a lot of places where you actually have to use some imagination to come up with something. I think it's sort of a dead end there.
But I think that's the good part, right? That's the good part where you let people try out things. VCs will fund them. Things will happen the way they should. Markets will decide. I think this is the best thing. This is the best part of capitalism at work. So I'm very happy that people are trying things. If it works, it works. Doesn't work, doesn't work. The only problem I have at a different level, philosophical level, is there are these bunch of people who claim that AI uses a lot of energy, and they are very unhappy about that. So this is where I get very worked up, because for me, energy usage is a good thing. People are trying to do energy usage because they believe that it will make their life better, and eventually energy will become more and more efficient, cheaper, whatever. Right, the good things will happen. But of course, there are a swath of people who just don't like the idea of spending energy, and that gets me very annoyed.
Yeah, it is annoying because when you think about it, a car uses more energy than a horse to take you from point A to point B.
Exactly. You could walk and save the energy as well.
Yeah. So, like, what rubbish is this, right? So, the whole modern civilization rests on increasing
Energy
use of
consumption.
energy and cheaper energy. So,
Yeah.
if you want to go back to all the way to the Stone Age, right?
Exactly. That's what I mean. But the thing is, if you put it that way, nobody will debate you. But if you say that you want to use energy for Bitcoin mining or for AI model training or something that is not somehow seems frivolous in some weird way, or it seems like it's a net negative for the world or whatever. Some people have perceptions around these things, and then they have outside influence on policy making and stuff. So things can become completely nuts. Speaking of which, there is a very interesting video orthogonal to this, where there is a Olympic cyclist who is asked to ride a bike and generate enough energy to toast a piece of bread.
To
So he has
what?
to toast a piece of bread. Like you put a bread
Okay.
in a toaster, and he has to produce 700 watts of energy for a minute for it to toast. And you see the amount of energy he actually puts in. Because I have done biking and I know how much 700 watts is and how hard it is to do that. That video will tell you that just to toast a piece of bread, you really need to work up a sweat which you have never worked up before, like physically. And that should tell you that using energy is a good thing because you're not doing all the hard work. You're doing it for free. Of course, you have to be somewhat responsible about how you do it and keep it sustainable, whatever. But absolute consumption of energy going up is a great thing. And I
Yeah.
find that quite sad, actually.
Absolutely, absolutely. So think abundance, not scarcity, right? That's what it boils down to. So I guess with that, we'll wrap up this month's Cryptonite. So
All right.
Tejasvi, thanks for tuning in, and guys, we'll see you again next month. Bye.
All right. Take care, guys.